This video is for the lab for chapter 8. There are a couple of documents that you can pull up and look at online, or you can print them out, it's up to you. But anyway, we have some transactions that a company went through, and then we have the invoices that go with the transactions, okay? And then we have an adjusted trial balance that we're gonna do a balance sheet for. So first we're gonna do the journal entries to go with the transactions. All right, so we have a few invoices. The first invoice is a sale of t-shirts and other merchandise from Rihanna World Tour to Drake's Warehouse and Concert Merch Sellers Incorporated. All right, so we want to do the journal entry that goes with that. Make sure that you notice that it has a 2% discount, and then the total of the invoice is $110. All right, and if you're looking at the transaction description, they tell us that the customer is paying for the shipping and that cost of goods sold is $55 for this particular transaction. Okay, so when we have a sale on credit, if you remember, this was 1017. It's accounts receivable. And this was to Drake. And the credit is to sales. Then you also have to have a second entry to record cost of goods sold and to take the inventory out of merchandise inventory. All right, that was given to us at $55. All right, when we have a sale on credit or a sale on credit with the discount attached, we need to record it net of the discount. So this particular sale was for $110. The discount was 2%, so I'm just going to multiply it by 98, by 0.98. And the net is 107.80. All right, the second invoice. The second invoice is to royalty merchandisers. All right, it also has a 2% discount paid in within 10 days, and it was for $230. All right, so on October the 19th, I'm gonna have the same exact entry. Well, the numbers are gonna be different, but the same journal entries, same accounts, I should say. So it's to royalty. And then cost of goods sold and merch. All right, on the transaction descriptions, they told us that the cost of goods sold was $115. And then I'm gonna do the same thing as I did up here. The actual sale was for $230, so I'm gonna do $230. I'm gonna do $230 times 98%, which is $225.40. All right, then on the transactions, they tell us that we received a letter on November the 20th from a law firm, and it's stating that their client, Royalty Merchandisers, has declared bankruptcy and will not be paying the account associated with the invoice 2258 dated 10/19. You decide to go ahead and write off the entire balance of the account using the direct write-off method. So this particular account, we're not going to be able to collect. So on 11/20, we're going to write it off using the direct write-off. If you remember the direct write-off, you just record it directly to bad debt expense and take the entire thing out of accounts receivable to royalty. Okay, and that's it for the journal entry part. All right, the second half of this lab is an adjusted trial balance. Okay, so we have, or a classified balance sheet is what we're gonna be doing. You have an adjusted trial balance. Remember that we're not gonna use on the balance sheet from dividends on down, all right? We don't use any of this stuff. This is actually an old income statement. It has some incorrect accounts, but it doesn't matter because we're not gonna use it anyway. All right, so we need to do a classified balance sheet based on the information up here. Now remember, this amount here for retained earnings, that's the old retained earnings. Okay, you need to be sure and use the new one that's down here at the bottom. Okay. All right, so our classified balance sheet. Let me see, make sure you can see. We've got Rihanna World Tour balance sheet. Remember, on the balance sheet, it's just the date. All right, so we have assets. Current assets come first. Our current assets are going to be cash through the inventory. Building through land is going to be the plant, property, and equipment. Accounts payable through unearned are going to be current liabilities. I'm going to make the note a long term. And this is our equity. Okay, so we're just reviewing. We've done this many times before. So cash, account receivable, and you know what? I'm going to add in minus the allowance for doubtful accounts, even though we don't have one, or the allowance for bad debt, because this is where it would go. And our merchandise inventory. And I'm actually going to change it up and do top and bottom. All right, so cash, we have 4,000. If we had an allowance for bad debt, I would write the account receivables over here. Our account receivables are really small, so we probably don't. I'm just going to say, well, it's 0 because we don't have one. But you would subtract it out, and then the net comes out here to the side. All right, and the merch inventory was 5. And that's it for our current assets. So it adds up to 9,200. All right, then the next thing I need to do is plant and equipment. So I have a building for 800 minus the accumulated for 50. So that's 750. And I have some land for 2,100. So my total plant and equipment is 2,850. Add those two together, and $12,050 are my total assets. Okay, liabilities and equity. So for current liabilities, I'm going to have accounts payable, taxes payable, and the unearned revenue. So this is 150, 100, and 430. So my total current liabilities are 680. And I'm going to have a long-term note payable for 1,200. So my total liabilities are 1,880. All right, then for my equity, I'm going to have common stock Retained earnings. All right, common stock comes off of the adjusted trial balance. Retained earnings, remember you've got to pick up from down here. So there's my total equity. And total liabilities and equity. Add up the 1880 and the 10170 and you get 12050. So complete that, upload it to the assignment.